they're waiting to see if Trump won. If Trump won, they were going to hire strongly or a lot stronger than expected. Who knows how it would have gone if the other candidate would have won? I wouldn't be surprised if it was a reversal of what we're seeing today. While neither report generally tends to be much of a market mover, combined, they further shook up the bond market, sending the 10-year yield higher. What did I say? 4.8? No, 4.68. Within a few ticks of the multi-year highs. The swift decline liquidated 300 million long positions, according to CoinGlass. This is the first large flush of the year, much like me after I eat Taco Bell. Now let's go to Poly Markets here. They were saying only one is priced in. Poly Market has proven itself pretty accurate, folks. The number one contender, 2 rate cuts. After that, though, we do see one. Now, if you look at the last week here, you can see the green and the red rows, that's 0 and 1. So the odds of 0 and 1 increased, while the odds of 2 or 3 decreased. But we are still seeing Poly Market saying 2 rate cuts for the year. So I don't know if you're firmly thinking it's going to be one. There's opportunity on Poly Market.
And they're both. It's 2. Does that have different basis points on each one of those? Is that saying 250 basis point rate cuts?
Oh, well, how many rate cuts? So I think they're just doing combined rate cuts. So I guess 150 would count as 2, as well as 225 cuts.
Yeah, they'll do. It's going to be 25 basis points, I think, nonstop. But
so you're thinking how many? How many are we going to get this
25 basis points, basically, is what we're talking about?
Yes, 225 cuts.
I think that's a little overly bearish. I think we're going to get.
You're thinking 3.
Like at least 3.
Well, there's a 5-to-1 odds if you want to bet on it.
Yeah, I should probably actually bet on that because I would say 2 to 3. And we'll know exactly probably next week too. Like, so what you should be following is going to be like, just pay attention like Fed Waller and all the commissioners, but they're really just looking at the inflation data that's going to come out next week. So January's a little bit rough start because you have all the way till the middle of January before you get that economic data on the CPI and the PPI reports coming out for these markets. And of course, the true one, which the Feds like to watch, which is PCE. So you have, a lot of inflation data coming out next week and then right after the inauguration. And even if it's slow, okay, even if it's slow, yes, the inflation progress has slowed down, but even if it's slow and still on its way down to 2%, you're going to see that fluctuate heavy to 3. So that is going to be the deciding moment and factor in these markets on how healthy they actually are.